What's going on, everybody? My name is Zach Hartley and welcome back to another video. In this one, we are going to talk about when to buy Bitcoin and when to sell Bitcoin. Now, there are a lot of different strategies that people use in order to try and figure this out for themselves. Some people like to just consistently buy and they call it dollar cost averaging. Some people only buy when there's a dip. Other people use pure technical analysis. Other people use market sentiment and social media. Other people try to put fundamentals and tie it to Bitcoin and figure it out that way. There are lots of different strategies out there, but in this video, we are going to focus on what matters and what drives price. And the only two factors that move the price of a security are supply and demand. When it comes to supply of Bitcoin, there's basically two different forms. Number one is people that want to sell their Bitcoin. That is the first form of supply when you want to go out and buy Bitcoin. And the other form of supply that impacts prices is the mining of Bitcoin itself. Bitcoin is issued to miners for securing the network and validating transactions. And so when it comes to supply, it is governed and manipulated and the factors that govern supply are who wants to sell their Bitcoin and how much Bitcoin is being mined at a time. The other side of this equation is about demand. Demand is determined by how many people actually want to buy Bitcoin and whether or not they want to use it as an investment or as a currency. The more people that want to buy Bitcoin and the more people that either want to hold it as an investment or as a currency, the more people that will need to own Bitcoin. And for them to own Bitcoin, they need to buy it. And the more people that need to buy it, the higher the price is going to go. If there is a massive influx of new supply into the market, it's going to drive prices down. And if there's a massive influx of new demand hitting the market, it's going to drive prices up because people are trying to get either in or out. And so lots of different things to consider there. Now, when it comes to actually figuring out when to buy and when to sell Bitcoin versus Apple stock versus real estate versus anything else, there's one thing that makes Bitcoin very, very unique. And that thing is called the halving. The halving is an event that happens roughly every 4 years. And what happens here is that the rewards for mining Bitcoin are cut in half. That's why it's called the halving. Currently, the reward for mining a Bitcoin block is 3.125 Bitcoin. This happens roughly every 10 minutes. And that means that there's 3.125 new Bitcoin coming into the supply and into circulation every 10 minutes. That number gets cut in half every 4 years. And so sometime between April and June of 2028, that number is going to drop to 1.56 whatever. And when that happens, we are going to see an impact on the market because it is changing the supply that is hitting the market and it reduces the amount of new Bitcoin that is going into circulation. Now, if you're not aware already, this is like the third, fourth, or fifth halving that we've been through. It started at 50 Bitcoin and then 25 and then 12.5 and then 6.25 and now we are at 3.125. And about 94.5% of all Bitcoin that is ever going to exist has already been mined. So we are all competing for that last sort of 5.5% of the Bitcoin supply when it comes to mining. And so that is what the halving situation looks like. And that is what makes Bitcoin so unique because there is nothing else like it. And so just to put this in perspective, the halving happens roughly every 4 years. It's not exactly 4 years on the dot. It is roughly every 4 years. And so the time between the first halving on November 28th and the second halving on July 29th was 43.4 months or 3.6 years. The time between the second and the third halving was 3.8 years. And the time between the third and the fourth halving was 3.9 years. And now it is projected and expected to be 4.2 years. But that hasn't happened yet, so that number is still to be determined. But roughly, this event is happening every 4 years or every 3.8 or 3.9 years. And what it does is it has a substantial impact on the supply. And because of that, it creates a 4-year price cycle of highs and lows. And so if we can understand this, it really helps us to make decisions about when to buy and when to sell. Now I'm going to show you a ton of data to back this up, but first I just want to show you the price chart so we can see it visually. So here is the Bitcoin price chart on a logarithmic view that is going from basically 2011 up until 2025, where we're at today. And just to show you the 4-year price cycle, I want to point out the low here from 2011. And if you go 4 years later to 2015, you'll see another low. And if you go 4 years later to 2019, you'll see another low. And if you go 4 years later to 2023, you'll see another low. And so we've got lows of each cycle happening roughly every 4 years. We also have a high here in November of 2013. We have a high here in November, December of 2017. We have another high here in September of 2021. And it looks like we could be coming towards another high here at the end of 2025. And so it is very clear that we are seeing highs and lows that are roughly 4 years apart, just like our halving is 4 years apart. Now, this is just some qualitative data. You can kind of see the peaks, you can kind of see the troughs. So let's put some actual hard data behind it to show you this pattern. And so the distance between the high in the first cycle and the second cycle was 47.2 months or 3.9 years. And so the distance between the highs from one cycle to the next was almost exactly 3.9 years. The distance from the second high to the third high in those cycles was actually 3.8 years. And then after that, the third one to the current cycle is we're sitting at right now 3.2 years. And so the distance between the highs of each halving cycle is working out to almost exactly the exact same time period as the halving cycle. For us, right now, we are expecting the high to occur at some point in October of 2025. That would put us at 3.9 years from the last previous high. And so that is sort of what I am forecasting in my head. So we can notice here that the highs almost line up directly perfectly with the time period between the halving events. We can also see that it lines up almost perfectly with the lows. So from the low of the first cycle to the low of the second cycle, December 7th, 2014 to December 7th of 2018, it was exactly 3.9 years. Same thing between the second and the third cycle, it was 3.9 years. Now between the third cycle and where we're at right now in the fourth cycle, we're currently at 1.7 years, and we are expecting the low to occur sometime around October 31st of 2026. That would be 3.9 years from the previous low. And so this is what we are looking at, and this is what I am expecting based on the previous historical data and what we know about this 4-year cycle. Okay, so now that we've identified the 4-year cycle and we know when to expect the highs and when to expect the lows, let's start talking about what we're going to do with the Bitcoin once we've started to buy it. Well, in an ideal world, you would want your Bitcoin to earn more Bitcoin, just like your dollars earn more dollars through interest in a savings account. Now, to make this happen, we use strategies called staking and lending. And historically, this has been a little bit difficult, and you used to need some technical knowledge in order to make this happen. But not anymore, thanks to the sponsor of this video. Sensible is a platform that allows you to deposit Bitcoin, Ethereum, or Solana and instantly start earning more crypto just for holding it on the platform. Currently, they're offering between 3 and 8% APY depending on what you have deposited onto the platform. And this allows you to quickly and easily put your crypto to work instead of letting it sit in a wallet and do nothing. Right now, Sensible is offering new account signups a deposit match of $15 for the first 250 people that sign up using the link in the description to this video and use code ZH. Sensible is backed by Coinbase Ventures. They have no minimum deposit, no account fees, and you can withdraw at any time. Plus, they connect directly with Coinbase, so transfers are super easy and convenient. So if you're interested in putting your crypto to work after you own it, please consider checking out Sensible at the link in the description down below and use code ZH at signup for your deposit bonus. Now, let's get back to talking about the Bitcoin cycle, because there are a lot of different charts and visualizations that people have put together to explain what we just talked about. And so here is a chart of the different cycles and the peaks in the price. Here's what they look like from the halving, following the halving. Here's what they look like over time. You can see the 4-year cycle here, and when we hit the high and when we hit the low, indicated by these red and green circles. You can also see another visual representation of it here. So nothing I am talking about is is groundbreaking or new, but it is something, and it is a major pattern that is happening because of the halving, and it only happens in Bitcoin. So we might as well use it as a tool and a piece of information when deciding on when to buy or sell. That is all I'm trying to say here, and that's what we need to think about. So where are we currently in the cycle? Well, as of right now, we are 375 days post-halving, meaning it happened 375 days ago. We are still in a bull market as of right now, but the projected peak of this bull market is coming up in October of 2025. So based on historical data, that is where we are at right now, and that is where we are forecasting the peak. Where do we actually want to buy Bitcoin though? That is the title of this video, and that's what we're here to talk about. Number one, the last cycle low happened in November of 2022. That means that we are most likely to see the next cycle low, or the best opportunity to buy, come in around October of 2026. So we've got a little bit of a waiting period here, but based on the previous data, that is where we are forecasting the next cycle low to be, which would represent the best buying opportunity for people like me and you. Now, other factors to consider here, and this is really important because there's lots of different factors that are starting to influence the Bitcoin price and the Bitcoin market that maybe weren't there 5 or 10 years ago when some of this data that we're relying on was put together. And so number one here is regulations. Bitcoin and crypto ETFs are coming about, they're becoming more regulated, and Bitcoin is becoming more greatly adopted. We also have institutional investment starting to move in, which is very, very different than what we had at the beginning of the Bitcoin history. It was very, very much small mom and pop retail investor kind of guys. Now we're seeing a lot bigger money step in and start to acquire some Bitcoin. And then lastly, we have major things like security and hacks, like what we saw with FTX or other platforms over the last few years. We've got some major concerns here, and these factors can heavily influence the dates and the cycles that we are looking at. The other thing that we really need to think about here is the impact of the halving. At the beginning of the history of Bitcoin, the halving had a major, major impact because there was so much Bitcoin left to mine. Every block that was getting mined had a major impact on the supply, and the rewards of that mining was actually very, very substantial. You can earn 50, 25, 12.5 Bitcoin at a time. Now we're down to 3.125, and it's about to get cut in half again in just a few years. And so the impact of the halving that is creating this 4-year cycle is diminishing. And what that means is that the impact of the cycle may also diminish, or the returns may not be as great, or they may not be the exact same in every cycle that we go through. And we're actually already starting to see that, because if you look at the price difference between the first and the second cycle, it was 15x. It was a 15x return. And then between the second and the third cycle, there was 3.47x return. And so it dropped significantly. And then in the last one, it was 1.58. Right now, we're sitting at a little bit above that, but we'll see where we end up at the end of this cycle. And so the impact of the halving is getting smaller as time goes on. And so the strength of this cycle may be diminishing. We may even be too late, but only time will tell. That's what I'm trying to say here. I'm trying to say this is not perfect. This is not going to happen 100% for sure, because we're already seeing trends that this is changing just slightly. So something to really keep in mind here. Now, in summary, the goal of this video is to point out to you this pattern. I want to share with you this pattern so that you can use it, you can factor it into your decision making, you can use it as a tool on your tool belt, and hopefully you can make more money or make better decisions. In summary though, we are forecasting the high of this cycle to be October of this year. We're forecasting the low of this cycle to be somewhere between April and October of next year, and you should use this data not as the end all be all, but just as a factor to keep in the back of your head, knowing that based on the historical price data, this is what the future looks like if it continues. Not saying it will, but if it continues, this is what it tells us. I hope this video helped. Thank you so much for watching, and we'll see you in the next one.